Yo, what is happening, Mad Gang? It is your boy MC, and I'm here today to drop a trade breakdown video. As you guys can see, the mask is on, the hoodie is on. Just wanted to personally greet you guys. Wanted to also show the live account details. Let me move this camera up. As you can see on the trade, it's the current balance is 5504. Then when I scooch up here to the history, I pretty much recognized that all of my trades are buy positions, and I mean, it's pretty ironic because we are in a buying environment, but there were some days where the market went down. It's not as if I'm always looking to buy. I'm actually typically a very adamant seller, so if I see the market dropping and I see a good potential trade where I can sell, I'm going to scale up into that move. So very interesting to me to see that we're buying, but it's with all the war tensions going on, it's with the quick spikes, the volatility, especially with NASDAQ, when I saw that all of the stocks are moving bullish, and the options expiries, especially in January, kicking in, the volume kicking in with the January momentum. I pretty much just scaled into the move. The only trade that I scaled in was on gold on the 8th of January. And then yesterday I took a gold position. I'm gonna run you guys through it, but that was a dumb position. You can see the profit on that one was only $56. That was a pretty dumb position. So I'm trying to humble myself before you guys. As you can see, it's not always going to be fun and games. I am going to make losses. This is actually a good streak, I'm not going to lie. Been really just on my finger on the pulse these past 2 weeks, and I'm trying to adjust my position sizing. As you can see with the trade on the 12th, it was a 0.13, and then yesterday I also made a NASDAQ buy position of a 0.13. I wanted to up my lot size. I wanted to actually make it a 0.23, because with every $1,000 that I go up with this account, I'm trying to up, numeric wise, I'm trying to up my lot size by 0.10. So for example, when I was at $1,000, I wanted to start with a 0.03. This is just hypothetical. And then when I was up to $2,000, I wanted to up it to 0.13, but then just try and adjust my stop loss. My stop losses are all based on structure. I'm trying to catch a thing that I like to call a candlestick flip. You'll see it on a lot of my previous videos. I really like a candlestick flip. That's what I'm kind of known for, is to get that candlestick flip, because I'm a momentum trader. I want to get in on the momentum, and I'll show. If you don't know what a candlestick flip is, don't worry about it. I'm going to show you. So I want to get in on that candlestick flip. As you can see, that if you go and backtrack, if you pause this video and you go and backtrack the exact time stamps of my trades, you'll see that I got in on momentum. I really don't like drawdown, so I try and steer away of drawdown. So trading, and let me just talk about this for a second. Trading is so beautiful because you can do what you want, what you like. I don't like drawdown, so I'm not going to sit through it, you know, just as easy as that. Of course, sometimes I do sit in drawdown. I'm not a unicorn in the trading world. I'm not perfect. I make a lot of mistakes. I still got a lot to learn, but I've been at this 10 years. And that's why I'm doing this, man. That's why I sit here with a mask. That's why I love my privacy. But in the same breath, I want to help you guys to experience something I never experienced, and it's somebody helping you. I had mentors along the way, but only when I could afford it, 6 years down the line or 5 years down the line. But my first 3 years, I was lonely, man. So I did not have anybody. It was just me in front of the charts, just literally drawing trend lines, drawing supply and demand, looking at the moon, the stars, just literally trying everything. So I'm going to remove the mask in a second, just turn the camera off. But I wanted to personally greet you guys, and I wanted to talk about this. And nobody's going to talk about this, okay? And before I talk about this, let me talk about that. So the other thing I want to talk about before I talk about this is I don't care about the likes anymore. I don't, and I'm bringing this up because a guy asked me yesterday, how do I have so many followers on Instagram? It's because I really pushed the Instagram algorithm. Once upon a time, I really pushed the algorithm to really get followers, but I steered away from that because I don't care if there's one person next to my casket or if there's 10,000 persons. If there's 10,000 people going to be next to my casket one day, I really just want to leave a mark. So if I can leave a mark on one of you, watching this video, if it's you watching that, thank you. I have massive love for you. Thank you that you allow me to leave that mark on you. If you're still skeptical, man, that's your loss. You're sitting here watching my video. You are wasting your time. I've got nothing to lose. I'm just sharing it completely free. So I'm not doing this for the likes. I'm not doing this for the algorithms. I'm not doing this for anything else but to leave a mark. I want people to remember me one day when I'm not yet. That is it. So with that being said, the topic that I want to touch today, before we get into the charts, is you're not going to see this anywhere else in the trading world, because they want to constantly push new things so that you can buy their course. That's what they want. They want to constantly, and I'm not naming any names. I don't have beef with anyone in the industry. Some people might have beef with me. I don't care. I'm a man. If you have beef with me, come and talk to me to my face. Well, it's going to be pretty hard, but you get where I'm going at. Like, we're all grown-ups here. But in the same breath, I want to say that they're all going to push new things. They're all going to run new schemes and so forth. And I understand it's a business, like 100%. I completely understand it. I completely get that. But in the same breath, like, you have to be ethical about things, and you have to have a specific way of going about things. So I'm not going to touch too much on that. What I want to talk about is today, not tomorrow, not next week, not next month. You're not going to make a change tomorrow or the day after that. I want you to make a change today. And I can't believe I'm going to say this, because a lot of people might run with this the wrong way, but trading is not about your strategy. And you've probably seen videos like this somewhere, but let me tell you what it really is about. It's not about risk management. It's not about psychology. It's not about how much money you have, how deep your pockets are. Trading is about scaling. So I explained to my members the other day, there's a difference between actively trading and making money. So when you're trading, you're just buying one position, and then the market goes, and then you make money, and then the next day you buy again, and then you get stopped out, and then the day after that you buy again, you make a small money. That's trading. Where you make money is when you find a very beautiful word in the trading space that I like to call edge. So you have to look at your edge. How do you get edge? Well, for me, I like to look at percentages. So for example, I don't really care what your trading strategy is right now. Let's just say you're a trend line trader, because I like trend lines. I don't use trend lines, but I like trend lines. We've got a love-hate relationship. So let's just say you trade trend lines. That alone, you need to go and, I'm just speaking hypothetical right now, but you need to go and do your own data collection. But let's just say you're starting from scratch, from a 30%, because look, the market can go up and down. That's a 50% win rate. But let's keep it real and say you've got a 30% edge. If you trade trend lines, that is, remember, once again, this is hypothetical, that is 5%. So now you got 35% edge. You're trading with the trend, that's another 2%. That's 37% edge. You know how to put stop loss to break even. That's 3%. That's another 40% edge. You need to start looking at it like that. What is your edge? But remember, there's no such thing as 100% win rate. No such thing. Now, don't look at my win rate on this, because you've got, when somebody talks about win rate, you always need to ask them, what is your sample size? So if I were to create this video 1 year down the line after starting this account, my win rate would have drastically dropped, but my profit would have been increased, because I know how to lose. I'm a great loser, and that is something that I needed to learn the hard way, believe me. I had a big ego, man. I was 19 years old, making money off from my phone. If you're that guy, bro, some tough times are coming, but it's actually going to save you, you know. Don't let your ego get in the way. So I'm getting off the point here. What I want to say is your edge is you need to look at numerical values, and that's the easiest way I can explain it to you, because there's so many, excuse my French, ladies, but bullshit on the internet. You need to look at this and you need to do that. You need to do more back testing. You need to refine your strategy. That's bullshit. You don't need that. Your edge comes in scaling. So where was I? Let's say your edge is at 40%, you're a trend line trader. Just physically scaling is, let's say you have a buy position and you scale in on that trade. Let's say you add 50% of your original position. Don't worry, I'm going to show you on the charts right now. let's say you scale in on 50% of your original position. So you're in at a 1 lot, and then when the market breaks a high, you're in at a 0.50. You just 0.5 times, well, not a full times 2, you just up your potential reward on that trade. Whereas if you just buy, take profit, that's out. Just sell, stop loss, you're out. You're trading against yourself. You need to capitalize on the winners and be stingy with your money with the losers. I hope that makes sense. Without further ado, man, I know I can talk a lot. It's just I need you guys to grasp this, but let me remove this mask because I'm struggling to breathe a little bit. So let me remove this mask and then we get into the charts. Okay. Cool. Man, that's much better. So basically, let's just get rid of this MetaTrader and let's start on the NASDAQ trade. So what I had gone and did is I pretty much just drew a vertical line on all of my trades that I took on NASDAQ, and then on gold. On gold there was 2 instances. I did scale on this position, I did not scale on this. This was the dumb position that I took. So where should we start? Let's start at the very first trade. So the very first trade was the 6th of January and it was on NASDAQ. So let's go to NASDAQ real quick. I'm going to try and speed things up, but I'm still trying to let you guys understand the edge. Now, just mind you, I have my own edge, and I know a lot of people want to emulate what I'm doing because, of course, it's working. I've been doing this for 10 years. But it's like, I always say this to my members, I don't want to force you to be somebody that you are not. It's like in the world of sports, like if you're a kicker, I'm not going to force you to go down and get tactical and fulfill some role that's not meant to be you. So maybe one thing will work for me, another thing will not work for you. And that's unfortunately just the way trading is. That's unfortunately why a lot of traders won't make it in this space, because they let their ego get in the way. They can't put their ego aside and focus on what works and focus on what can change their trading, even if they don't like it, you know. So without further ado, let's start on the first trade of NASDAQ. Now, one thing I want to make obvious to you guys is that one thing that I've really come to the conclusion to me, that has really come to the conclusion to me, is my timing. So I went back and I saw that a lot of my trades was in the wrong time zone. So I just want to point that out. You need to go and look at when most of your trades were, and you need to see, are you sacrificing your profits or actually making more profit by trading, let's say, London session or NY session or Asia session. So I do trade in NY session, but there's a specific hour that I don't trade. So if you go and look at all my trades, you'll pretty much understand. So with NASDAQ, I don't have that. But with gold, I'm not going to give everything to you. You need to earn this. But there's a specific hour in gold that I stay completely away from the market. And that's actually a big time that a lot of traders trade, and the market makers know that, so they're going to capitalize off from that. So with the first position on NASDAQ, and once again, I'm pretty much going to give it away. Going to edge leak myself over here. Edge leak is when you basically leak your edge and you give away what you're doing. And you'll pretty much be able to spot what I'm doing. And it's very easy to do. It's the same thing, same skill. It's going to pay you for life if you just pay attention, man. So stop wasting time and just pay attention to what I'm telling you today. So the first thing that I saw, I'm always looking for the market to be in a box, right? Because trading is so difficult. I'm trying to make it easy for myself. So I saw the low of Asia, saw the high of Asia. So I'm constantly looking at boxes, whether it's the high and the low of the previous week, high and low of the previous day. I don't care. I'm always looking at boxes. I'm trying to see if the market is in balance or whether it is out of balance. So I'm trying to sort of gravitate towards a sense of, okay, we're going to break out now and make an impulse move and then revert back down because we hit the previous day high, or we're going to have a fake out. You know, I'm trying to create a bias based on from a previous day or previous session. And I used to do this when I was backtesting. I used to literally just go on on my charts and just literally draw highs and lows and practice my eye. As you can see, you tested the high, went back up. It's because it broke this high and it made a false break reversal. And then we created another low, and then it broke that low, it continued, and then it made another low. And now I was waiting for that, for that low to be broken. So that was literally what I did. I was talking to myself like that. And yes, I know people get locked up for talking to themselves. I'm not a crazy person. It's just that I was constantly just renewing my mind every single day based on the highs and the lows. So the point of interest was this area. I believe if you go back on my trading data, if you really just want to see if I'm legit or not, I did point out that this is a strong level, and we did look at that strong level. Another thing I want to point out is I'm very, very skeptical if I don't look at my day count. So I always have to look at my day count. My day count, if you don't know what that is, just go and look at my bootcamp on YouTube. That is also, guess what, free. So you've got literally no excuse. We saw this downtrend, we saw the open close downtrend, open close downtrend, and then this trade came. But I mean, it might look difficult in hindsight, but if you really just pay attention, you will see that it was not that difficult. We saw the break above the previous daily high, and we saw the break down low. But look at where the market closed. There was the open and the close. So if you're ever confused, just zoom out and look at the open and the close. Yeah, it broke highs as well, but let me just go to the 30-minute, and you can pretty much see that on the 30-minute, it was one candle that broke. Let me just extend this. It was one candle that broke, came back down. One candle that broke, came back down. One candle that broke, and then came back down. And then another big ass candle that broke, but then it came back down. Whereas opposed to with the low, it broke with multiple candles. So that was pretty much a convincing point to me. And then the following day, we had a bullish close. Now remember, when we have a bullish close but no highs or lows have been broken, that day is on hold for now until the following day. So what I mean with that is, this is a potential green setup day right here. Okay, but it did not confirm until we broke a high. So by the time that we broke a high, I was already in the trade. So it was a little bit of a cocky move. I'm not gonna hide that. I'm not gonna hide the fact, but I mean, it just comes with experience. I knew the timing was right. My timing was right. I understood that the volume was kicking in. I was looking at my Mag 7, so I was looking at the top 7 stocks of NASDAQ. I was looking at the S&P, and I was looking at the value of dollar, and I was anticipating that move. So I jumped in before the move, and it might be wrong. I don't know what's your opinion, but it worked, okay? I don't care if it's wrong according to your opinion. So by the time that it closed above the previous daily high right over here, that made this one a green setup day 1. So this is my green setup day 2. And yes, even though you did not catch this initial buy position where I caught my buy position off, as you can see here at the top, that's okay. You could have caught the rebound, whereas I already pointed out that's a strong level, gave us the rejection with a bullish engulfing candle. Now once again, I did not take this trade, so I can't really speak too much on it because hindsight is always perfect sight. But you could have taken that buy position with a candlestick flip and then stop loss down low. Guys, there's so many nuggets in what I'm sharing to you right now, so I really hope that you're paying attention. Easy, simple 4.9 RR trade, or something like that. My initial position came from, understood it was a green setup day 2. The timing was right, and same thing, like I just explained. We had a bearish candle with a bullish engulfing candle. Entry somewhere around about here. It depends on your broker's pricing, with the candlestick flip and then stop loss at the low. MC, where is my take profit going to be? Your take profit is going to be at the high, at the high. So I saw this high as being as a lower high, and I saw myself getting out over there. That's a first position. I probably could have held, but I want to talk about this topic for a second. You could have held and you could have made more money. Bro, you can't even catch a 1-to-1 risk to reward ratio. Now you want to come in and criticize someone that's not hitting a 1-to-6. Like, what's wrong with you? So, like, just put your ego aside. Focus on those base hits first, and then you focus on a 1-to-2 RR. You focus on a 1-to-3. You focus on a 1-to-4. Focus on just making money first, Stop trying to criticize everything and say, no, that's wrong and that's right, and just focus on your own lane, man. Second day, I knew now that this was my green setup day 2. So of course, the third day, if we broke above, would be my green setup day 3. So as you know from the bootcamp, my favorite position, and I'm really naughty for this, like I really like this, is a buy at the low, buy at the sell at the high day. Buy at the low of the day, sell at the high of the day. I really like that trade. It's in my playbook. I really like that. Like I'll take that trade 9 times out of 10. So we had the double bottom, I guess, if you want to call it. We had the double bottom. Come on, just make this like pink or something. We had a double bottom at the low. So it pretty much indicated to me that we're losing strength. Buyers got rid of their strength, got control of their strength. The sellers got rid of their strength. And that was cool and well, but that just gave me like 2% to my edge. But what I really liked is if you look at the blue and the red EMAs, they were crossing. And then I saw a rejection candle with an engulfing. Once again, we see that happen. After that, I did point out we have a strong level, but once again, that's edge as well. So as you can see, as I'm talking, my edge is really building up with the green setup day, the double bottom, the bullish engulfing candle, the trend is changing. You can see my edge is literally just jumping and jumping and jumping. So I'm looking at probabilities in a sense. Yes, the market can just decide, you know what, you read the market wrong, you read the tape wrong, the market can just drop. And that's okay. That's why we have stop losses, okay? Stop loss doesn't mean you're a shitty trader. Stop loss means you know how to manage your money, okay? That stop loss does not mean that you're wrong. Stop loss means that you're protected. So get rid of that idea. Another thing, we saw this candle after the break of the London session, which was pretty much a dead giveaway to me. If you go to the 30-minute, if you go to the 30-minute, you can see that we closed above. So I always like to look at high multiple time frame confluences. So we can see another candle closing above, and then that candle closing above, sort of like in a pin bar formation. Let me just go back to that. It was over here. So I saw the bullish engulfing once again, guys. I mean, NASDAQ is dirty with the bullish engulfing candles. It's so easy to spot. And I did exit earlier than I would have liked on this particular trade. If you can see here, let me just refer back to this once again. But ultimately was happy. As you can see, literally zero drawdown because I enter on the candlestick flip. Candlestick flip, candlestick flip. Remember that. That's super important. We saw the close, and I'm waiting for the market to push down and then flip to the top side, breaking that high. If it's a sell, I'm waiting for the market to come back up, break that high, and I'm tapped in. That's super easy. Candlestick flip changed my life, changed my trading. On to the next one. What was the next one? Okay, we're back on gold. Let's go to gold real quick. Okay, so this gold position was, there was a little bit of critique forming around this level, like MC, why did you take this trade? Why did you not take this trade? So I want to spend some time on it, but of course not too much. So this trade gave me I got this idea from the daily structure. Okay, I got this idea from the daily structure. I saw that we were bearish. Look at the open and the close. We were bullish over here, but then bullish, open, close. Okay, bearish, open, and close. But this, once again, was an inside day. And this is where the confusion came. People thought that this was a bullish close. No, we did not break a high, and we did not break a low. The following day, we had the open, and then we had the close. What does that tell us? That tells us that it's still bearish. Okay, this inside day did not mean anything, did not mean much. The following day, we had, let me just make it super clear for you, open and a close. What happens here? This is where the confusion came in as well. This is super difficult. Let me just draw a line from the open, and you can see where is the close, the closing candle. Remember, market closes like over there at the top with a bullish candle. It closes it closes at the top. So that is our first bullish candle, and we did not break a low, we only broke a high. So then that's a green setup day, day 1, green setup day, day 2, green setup day, day 3, but then after that we had an inside day again. If this was a bearish day, I would have been looking for sells, but we did not get a bearish day because this candle closed above, down low, and then broke back above. So if it's two candles like this, this is my only rule breaker with the daily structure. If it's two candles like this, if it's bearish and then bullish immediately hitting back inside of the range, I disregard that. I don't count that as a day, because if you look on the 30-minute, it's a massive rejection. If we were closing down, that's why candlestick maturity plays a big role. If it was a 30-minute candle that closed down low, then yes, I would have definitely looked at going short. So it's the same pattern. Once again, you guys pretty much put 2 and 2 together, came to a conclusion right now. But what I'm looking to trade, we saw the green setup there, day 4, I believe, something like that. And then we saw the Asia session low. Once again, what did I say in the beginning of the video? I like my highs and my lows. Highs and lows, highs and lows. Once again, we had the low of Asia session, the market consolidating inside of that range over here. We did not break a high and a low. The market came back down. Once again, I keep saying once again, I'm going to stop saying that. So we have the bearish candle, then another bullish candle breaking up above and then closing inside of that range. Now, if you really want, you could have dropped down to a lower time frame, but that's not my rigid approach. That's not something I usually do, but this is just what I want to explain to you. We can see we have higher lows. But remember, and this is why I like structure, but I'm not rigid with my structure always, because the trend is your friend until it bends. So you can say it's an uptrend, it's an uptrend, it's an uptrend until boom, the market can just reverse against you. Now, once again, that's why we have stop losses and shit. I said once again, but you know, you guys get my point. We had a higher low, and a higher high. Let me go back to a 15-minute time frame. So 15-minute time frame, as easy as it is, you guys guessed it. We had the rejection candle with the bullish engulfing candle breaking that high, and then this was an ugly candle, man. I'm not gonna lie, this was super ugly. But look at the timing. Look at the timing. I'm always going to say that. This was at NYAC Open. Of course, we're going to have a massive surge of volume. Of course, it's going to happen. You can't go against that. But the market might have trapped some sellers over here at the top, at NY session top. Let me just do this. Go to 1 minute. Where is that ugly candle? 1630 is right there. Okay. So the market came back up and then went back down, trapping those sellers here at the top. And then once we got enough momentum, we hit back to the top again. Almost like a short squeeze, if you will, like characteristics of that. Another bearish candle with a bullish engulfing variation, and then a buy position with a candlestick flip. Targeting those highs. 3.3 risk to reward ratio. Stop loss is always going to be underneath the candlestick flip. No negotiations on that, like not ever going to negotiate. And I want to say this before I forget, one thing that I have noticed with this account is I'm really slacking with my scaling in. But the only reason for that is I'm still trying to figure out my lot sizes. I still want to play it safe so I can build somewhat of a buffer. And I think I've pretty much built a good buffer. So from next week, I'm going to go bigger. I'm going to go bigger with my lot sizes, and I'm also going to go bigger with my scaling. But so I'm going to play with my profit now. As soon as I see that I'm making a ton of losses, ton of stupid mistakes, I'm going to go back to my original lot size usage, because I can see now that these lot sizes work. I was comfortable with them, but I'm going to up them. I'm probably going to multiply all of my lot sizes, and I'm going to see. Of course, I'm going to have bigger losses as well, but that's what the buffer is for. So the next trade is gold, which I stacked on, and then NASDAQ on 12. 12. NASDAQ. NASDAQ is going to be the same pattern, guys. I'm not really going to touch too much on that. Bullish trend, same pattern, over and over and over again. It's what's that one quote that Bruce Lee said? He does not fear a man who had practiced 1,000 kicks. He fears a man who practiced one kick 1,000 times. So that pretty much stuck with me. We have the bullish trend. The market is pushing down low, creating our low of Asia session, coming down, and then potential trapping the shorts over here. But then you can see on my analysis, this is a massive exhaustion area. The market is exhausted there. That's basically the market telling us, hey buyers, oh well, hey sellers, we buyers are in control now. Sellers got exhausted and then they pushed the market back up. It's literally just the market, sellers being all Brad Pitt, and then they got tired. So pretty much just this exhaustion area where the market is really just telling us that it doesn't want to push short, okay? Then we have this London session consolidation. Market is creeping up to the top, but pay attention to this high. So this high broke the London session pre-NYSE open. So that's telling me that we've got some longs over here. We've got some people that want to go long over here. And I'm not too sure where I put my strong level, but I do recall it being somewhere over here. And we tapped that to the T with, you guessed it, an engulfing candle. So the engulfing candle came back up, and I got tapped in. I got tapped in a little bit earlier. I was a little bit upset, but as soon as I saw my profit, I just let that go. And I'm saying that in a humble way. I'm not chasing the money, but I mean, it was good to see. But in the same breath, when I saw that we had no wick, I was afraid, because I don't like trading in a range where there's no wick. The market is going to come back down sometime. Let me say again, sometime, and fill that range. Okay, so when I saw that, I was really just trailing my stop. I was really just trailing my stop as the market went, and then I covered over here, and then I got tapped out here at the top. Let's look at the next trade, the 15th. Oh yeah, that was yesterday. So the trade on gold, man, that was a dumb trade. Where did I get filled on gold? The gold fill was at 25, no, that's NAS, 4607.98, 4607. It was around about here. That was. I broke my rules with that trade, and as soon as I saw profit enough for me to get out, I pretty much got out. I was trying to take the buy off from the low of the day, but I was waiting for 1630 to give me the bias, and I saw this big rejection candle. Yes, I was right with my direction, but the stop loss was terrible. So I could have made a massive mistake and could have lost a lot. I was tapped in over here somewhere, but my stop loss was huge. It was round about here. So the profit, I got into profit immediately, tapping the high of London session. And I'm going to repeat this again. I sound like a broken record, but it's the highs and the lows. The money is made at the highs and the lows. Please remember that. So I saw the high being tapped. We also had a key level over there. And then immediately I got out somewhere over here. And then the market just tapped down low. But this was the perfect buy. We hit our strong level with, you guessed it again, a rejection candle and an engulfing candle, candlestick flip. I did not take this trade, just for transparency. Hindsight is always perfect side. And then going to the 30-minute, you can see exactly the same. You remember exactly the same when we saw the exhaustion area down low. We had an exhaustion area up here as well. So this is the danger zone. You needed to have your finger on the trigger at that area. Go down to 15-minute. So just trading your stop at each and every low. But let's talk about the last trade, which is NASDAQ. So this was pretty much a scalp, and I must be honest, I did not anticipate it to be a scalp. It was just the way it is. You know, we had this strong area because without me giving away too much and still wanting to help you, the trend is bullish. We have a candle where our strong volume momentum area is. We have this candle pre-NY session. Look at the timing again. If you look at the bottom, just really pay attention to the timing. Pre-NY session 14:30, and then after 16:30 we had our bias being formed. The market gave a spike down low because I do recall Amazon and Google, the top 7 stocks, they're part of the top 7 stocks of NASDAQ. Amazon and Google gave a spike down, but then later on reverted back up. So when I saw 5 of the 7 stocks of NASDAQ pushing up bullish and S&P 500 also pushing bullish, I saw our test here at the bottom. I went down to a 5-minute to really just understand where we are with market structure, and I saw that we had some sellers. And then another exhaustion characteristic, we saw the bullish candle pushing down low and then breaking up higher inside of that range. So when I saw us break that high, I was pretty much convinced that we're going to push up. And then to where did we push up? We pushed up back until the high. It's like clockwork, folks. It's literally like clockwork. We saw the exhaustion area. So that's pretty much it that you can recall. Very easy analysis. You need to have some sort of an entry trigger. As you can see, the entry trigger I have on every single trade, there was a strong line that I was looking for. I was looking at my trend. Did we trend the previous days? Are we out of balance? Are we inside balance? I was looking at the highs and lows, and I was looking at structure. I am really going to pay attention for the remainder of this challenge to my scaling. So it can really just blow up, compounding, or it can blow up in my face and I can look like a dumbass. Remember, I've been trading for 10 years, folks, but it's only because it took my stupid ass that long to learn this. It doesn't necessarily mean it's going to take you that long. With that being said, with this video, I just gave up like 2, 3, maybe even 4 years of my learning journey to you on a silver platter. Now the choice is yours. Are you going to use this? If you don't like my voice, if you don't like my face, if you don't like me, I don't care. I'm here to help. Just forget about all that and pay attention, take some notes, and hopefully you guys learn something. Send me a DM, send me an email if you have any questions. I'm here to help. But remember to flip that damn switch, man. I'm super proud of you for putting in the work, and I'll see you guys on the next one.